A little bit. Good morning, everyone. If you can hear me, see me, let me know, say hello, and let me know that everything is working. The sound is working. Good morning, Chris. Good morning, Andrew. Good morning, everyone. Good morning, Miguel. Wonderful. I am so glad to see that everything is coming through. Thank you, Dorley. Okay. Um, it's a brand new trading week. It's the unofficial end of summer, and I'm so glad in many ways. While I have had a great summer, I am glad to be, back in the desk, back at, trading, rocking and rolling. Last week was very quiet in the markets for the most part, but, we thrived. We did well. We closed out August with, another strong month for ZIP as well as, our other trading strategies. So it's been a good summer. And in general, I'll kind of share with you the performance in a little bit. But before we begin, I always like to get a sense of who's new here, who is joining us for the very first time, and live streaming with us for the very first time. Say hello if you're brand new. Let me know what you're trading, forex, gold, indices, so that we can make sure that we touch on everything that you want to talk about, because this is a very important week in the markets. It's a very busy week in the markets, not just because of the data calendar. There's a lot of headline risk. There's a lot of political things that are happening that could affect how the markets trade. And we are going to talk about all of them. Alan is brand new, so welcome, Alan, to our live stream. I'm delighted to have you here. Um, and Alan, okay, you trade forex, gold, fantastic. I specialize in forex. My trading partner Boris, he trades gold and indices, so he's going to be joining us in just a little bit to talk about all of that. Hello, Jay. All right, so let's go ahead and kick off. Give me 1 second to just share my screen. And okay. All right. So I'm just going to share this screen with you. So I talked about how I was going to share with you, our performance. In August, we made another 300 pips. So this is, basically we haven't had a losing month trading ZIP since May of 2023. Of course, past performance is not indicative of future results, but this just shows the consistency in applying fundamentals to trading. The consistency about being selective. It's not just about, bragging about my results. It's about showing you that when we learn, we prepare, and we plan our trade accordingly, that, this is the way to have long-term consistency, long-term performance. And that's how I trade my own strategy, ZIP. And that's how, I encourage everyone else to trade as well. Now, talking about the market, talking about what could happen this week. Now, there's a very busy economic calendar that is mostly, I would say, backloaded. We have the most important reports for the US dollar on Thursday and Friday. Thursday, we have ISM services, which tells us how the US economy is doing on a service sector level, which is basically the biggest part of the economy. And then on Friday, we have the big kahuna. Friday is the U.S. jobs report. And the U.S. jobs report is the last U.S. jobs report that we'll get before the September Federal Reserve meeting. So as you may or may not know, the market is pricing in pretty much 100% chance of a 25 basis point interest rate cut from the Federal Reserve this month. And so the non-farm payrolls report is, expected to, number one, confirm that, but number two, also basically set the stage for the market to think about whether we're going to get one or get 2 or 3 interest rate cuts this year. If the NFP report is weak, the market will be thinking that we have 3 interest rate cuts this year. If it's better, maybe only 1 or 2. Now, Mr. Kibria is asking the number one question of the day, which is, why is the US dollar up today? And the US dollar is up today because some of the other factors that are driving the markets. Now, I talked about how the number one focus, there are 5 things that are moving the markets today or this week. Sorry, there's 5 things that are moving the markets this week. Number one is the expectations for the US jobs report on Friday. But there are a lot of political factors. The reason why the US dollar is up today, and for those of you that have joined me in the past, I talk about how the first thing that I do every single day is I look at how US, or one of the first things that I do every single day is look at how US yields are doing. And I'm just going to remove ZIP and I'm going to put it on the daily chart. You can see that US yields are up today. This is a 10-year US Treasury yield. It's up 1.6%, which is a pretty chunky move, 1.6%. So it's up 1.6%, pretty chunky move. And this is, one of the main reasons why the dollar is up, because US yields are up. But then the next question is, why are US yields up? Why are stocks down? Now, if you are one of our members, we walk through our 5-step fundamental checklist. And one of the first things that we do, aside from looking at the calendar, looking at news headlines, we check some of the major news channels like CNBC. And oftentimes I'll explain to you what is the big story of the day. And here it says Treasury yields jump on the prospect of the U.S. having to refund tariff money. And you may think, what are they talking about? Let's click on this and let's read this. This is the main story about why the dollar's up. And it's because, it talks about how over the weekend or on Friday here, on Friday, a federal appeals court on Friday ruled that most of the global tariffs are illegal. Most of the global tariffs are legal. The court determined in 7-4 ruling that not only Congress has the power to implement sweeping levies and not Trump. So then the question is, if the tariffs are illegal, will the Trump administration need to start refunding the tariff money? That is the big question. And as a result, Treasury yields jumped on the possibility of the U.S. having to refund the money. And so, as I said before, the dollar tracks U.S. yields. And, I can just show that to you if we put in, let's just do the dollar index chart here. And on the dollars index chart, I'm going to add in U.S. 10-year yields. And I'm just going to move it to actually, I don't even need to do that. I'm just going to zoom out and you'll see pretty much mirror images of each other. So Mr. Kibriya, you're asking me, why is the dollar up? Well, the first answer to your question is because U.S. Treasury yields are up. And that, U.S. dollar tracks U.S. Treasury yields. And then if you're wondering, why are U.S. Treasury yields up? Check the major news channels. CNBC pointed right there. U.S. Treasury yields jump on the prospect of the U.S. government possibly having to refund tariff money. So we talked about
I just want to jump in on this tariff issue because I'm sure a lot of people are going to have questions. You have to understand that even though the appellate court ruled against Trump, they're going to go to the Supreme Court, and it's very, very likely the Supreme Court is going to affirm Trump's authority to be able to install tariffs. So while this story is clearly broiling the markets a little bit, it may just be an excuse for profit taking as well. I don't think it's really a legitimate risk that Trump administration is going to have to refund tariffs or that he's going to be able to change, he's going to be forced to change his tariff policy because all of this is going to be adjudicated in the Supreme Court, which is probably going to side with him. So just a quick note here. I'll let Kay continue.
Okay. So, all that is speculation, but operating on facts, if the tariffs are refunded, why are Treasury yields up? How come this impacts Treasury yields? It's because, where's the money going to come from to refund those tariff money that has already been collected? You read along this article, and there was a little comment by Ed Mills from Raymond James. If the ruling is upheld, the refunds of existing tariffs will only be able to be refunded through Treasury issuance. And when you issue treasuries, that drives prices down because more supply is being put in the market. So the price goes down and yields go up. So this hopefully will help you understand why, number one, the dollar is up because US Treasury yields are up. And why US Treasury yields are up? Because of the prospect of the US having to refund tariff money, right in the center of CNBC.com. And why does refunding tariff money increase yields? The answer is right here. So hopefully, that kind of helps you to understand a bit about how everything is interconnected and why the US dollar is up today. So they're watching a couple of things. I talked about how we're watching non-farm payrolls. We're watching, this whole tariff headline. Another thing we're watching is that President Trump is delivering a press conference at 2 p.m. Today. Now, you may or may not know this, but if you go to X, one of the big stories, I don't know if it's going to show up on your X, but one of the big stories that had I guess earlier, I had a summary, but one of the big stories today is that the president, actually the trending topic is the president. One of the big stories is that there was some speculation about the president's health over the weekend. And people thought, maybe he's having some health issues and he hasn't spoken publicly in a good number of days. And so there was a lot of speculation all over social media about his health issues. And so he has announced a press conference at 2 p.m. from the Oval Office today. So, whenever he gives press conferences, those could potentially be market moving. We have no idea what he's going to say, what he's going to announce. And so that is also an uncertainty that the market is watching today. Now, that uncertainty will be cleared up by 2 p.m. or around 2 p.m. because when we hear from him, we'll know pretty quickly what the point of the press conference is. Whether, he's healthy, you don't be concerned about my health, or, something happens, there's an issue, but chances are, I think he's fine because, there are reports that he was seen in Virginia playing golf and he probably wouldn't be delivering an address from the Oval Office if he wasn't okay. So, but either way, that is the third focus of the markets this week, which is, the press conference from President Trump at 2 p.m. today, which was unexpectedly announced. The fourth thing the market's focusing on this week is Lisa Cook, the Fed governor. A decision on whether or not she will be removed from office is expected to be made this week. Now, remember, Trump, fired her. I don't even remember, honestly, if it was a week or 2 weeks ago. It seems like all the time's a blur. But Trump announced that he was going to fire her. She sued back, and a decision is expected this week. That is also going to have a significant impact on the markets. If she's removed and she's replaced by a dovish Fed governor, that's going to put the Fed closer to doing more aggressive rate cuts in 2025. And the fifth factor that's affecting the markets, and single-handedly the reason why dollar yen is the biggest mover. I'm going to remove the 10-year Treasury yields. If we look on, I don't want to see all this stuff. If we look on the change basis, well, dollar yen is not the biggest. Pound dollar is biggest, but the yen is down across the board. And dollar yen did kind of break out to the upside. For those of you that like to look at trend lines, dollar yen broke out to the upside on a trend line basis. And the yen is lower pretty much across the board. And the reason for that is because there's been a whole bunch of LDP resignations. LDP is the current ruling party in Japan. And there's been a lot of LDP resignations. And the question now is that going to push the current prime minister to resign as well? So that is another political factor that is affecting the Forex market, affecting the yen in particular. So those are the 5 things that the market's watching. The 6th thing, which is kind of a bit of a bonus, is the political situation in France. They've got a confidence vote, I think, next. I'm looking at my notes. I think France has a confidence vote next week. And it looks like the French government is poised to fail after next week's confidence vote. And so that could also be capping the gains and putting pressure on the euro today, even though we had stronger Eurozone inflation data this morning and we had stronger PMI revisions yesterday. So all of that is important. And then, of course, the seventh thing, I guess I just get a laundry list of things, but this is really something that affects it next week, is that we have OPEC this weekend, which will affect how oil prices are doing. And oil prices are up quite a bit today. So we're kicking off this brand new trading week with a lot more in terms of headline risk than data risk, because we do have a lot of data, but data is not until the end of the week. And whereas a lot of the political developments, with Trump, with Lisa Cook, with the tariffs, could all happen in the front of the week, along with, what's going to happen in Japan with the prime minister vote. So much going on this week that could affect how the market trades. So I will, keep you all updated, but those are the things that you need to watch, which is the political developments in Japan, the political developments in France, and the political developments here at home in the US. But I started off showing you this heat map, telling you that I'm dollar bearish. I'm dollar bearish because, the Federal Reserve is expected to cut interest rates. And I have a strong belief that the non-farm payrolls report on Friday is going to be quite ugly. So the dollar, which did not, if you look at the dollar itself, actually rallied against this. This is the dollar rallied against the dollar today. And if we look at the dollar index, which is a trade-weighted measure of the dollar, we can see that the dollar index, it did dip lower last week, but it's just been in a range trading zone. So I'm still bearish. And if we pop like this, it is an opportunity, in my opinion, to sell at higher levels in the US dollar. So I'm going to remain bearish dollars. Now, even though I'm bearish dollars, doesn't mean that I'm not necessarily going to take long dollar trades. Today, this morning, we actually had a couple of zip signals that we took. So for those of you that know what my zip signal is, that's basically, if we are, background is green and we have a white candle and it moves above the indicator line, this is a buy signal. Now we're looking at oil. I don't trade oil, but this is a buy signal in oil. What I do trade, however, are currencies. And this morning we had a Eurodollar zip sell signal during the London session. And I come into the New York session, we're pretty much trading around the same rate. And, this is a zip sell signal in the Eurodollar, and boom, a nice almost 40 pip move lower in the Eurodollar. So we sold Eurodollar. We also went long dollar CAD. This is a zip variation. The dollar CAD trade was a very, very nice trade, because one of the things to know is that dollar CAD is one of those currencies that love to gravitate to the round numbers. So, it was trading at 137, I think 60, 70s. We went long at the New York Open, and boom, it pierced above 138. Kiwi dollar also in the zip sell zone. But ultimately, all of this just shows you the different setups that we have. Another trade was Aussie Swiss that we took this morning. It wasn't a zip sell signal, but Euro Aussie. We had a zip buy signal, 78.94, easy 30 pips, in this Euro Aussie trade off of the New York Open. And once again, the zip buy signals are the white candles with a green background. Sell signals are the red candles with a red background, but we only trade during the trading times. So my point I want to make is that even though I'm dollar bearish, I'm not going to forego the dollar bullish signals. I may just take a smaller position and get out sooner. But I may, still take the trade if I'm dollar bearish. But ultimately, I think NFPs is going to disappoint. I think that the dollar is going to trade heavily this week. Euro, I'm bullish euros because we had really good euro data. We had stronger Eurozone PMI revisions on Monday. We had stronger Eurozone inflation data today. Eurozone data in general has been quite good. And so I'm going to be leaning towards buying euros, particularly against the crosses like Euro Aussie, for example. Now, in terms of Eurozone data, we talked about how they have, France has a no confidence vote next week. Tomorrow, we have more Eurozone PMI revisions. And then Thursday, we have retail sales from the Eurozone. The UK, I'm bearish British pounds because we have a lot of weaker data. Now, sterling was actually the weakest performing currency today. The only big release for UK this week is Friday's retail sales report. And that is also expected to be softer. And we're looking at weaker, BRC retail sales and things like that. So we are looking at weaker data from the UK this week. And so I'm bearish sterling. I think it can continue to move lower. Aussie, I'm neutral, bearish Aussies. We have Australian GDP numbers tonight. They could be a little stronger, because we had stronger retail sales in the second quarter. But overall, I think Aussie, we're neutral. They are looking to cut interest rates again, but the data this week could be a little stronger. I think it's really going to trade on US dollar flows. CAD, I'm neutral bearish. We had really weak GDP numbers from Canada on Friday. And so, and also, but oil prices are up a little bit. But I think, CAD is going to trade with a slightly heavier bias. But aside from the GDPs, we only have the labor market numbers on Friday, which should be stronger given how the weaker report that we had the previous month. The New Zealand dollar, I'm very bearish New Zealand dollars because RBNZ, they cut interest rates. They said they thought about doing more. So I think, Kiwi could continue to fall. And then I'm also bearish the Swiss francs. Those tariffs are quite hefty, and they are at zero interest rates with the possibility of going to negative interest rates. And then the yen should be more neutral than bullish, because honestly, I'm bullish because I think stocks are going to fall this week, which they are. I think we've seen a peak in stocks. And I'm also, but ultimately, I think that the political situation is hampering the yen. Now, in terms of economic data, let's look at the calendar. As I said, we already had some data released on Sunday, Monday. In terms of Sunday, we had job ads, inflation data released from Australia. They were slightly weaker, nothing very market moving. On Monday, we had upward revisions to all the Eurozone PMIs. Swiss retail sales numbers was really ugly. Some minor UK data. And then today we had stronger Eurozone CPI numbers, which I think is quite important. We have ISM manufacturing later this morning. President Trump is speaking at 2 p.m. That's the main focus. Australian GDP is expected to be stronger. That's coming out at 9:30. So BK traders, we're not going to be trading Aussie tonight. We'll be trading some other currencies, but we're not going to be trading Aussie ahead of the GDP report. On Wednesday, we have some minor data, nothing all that significant, but we do have to pay attention to the JOLTS report because these are the leading indicators for non-farm payrolls. The JOLTS measures job openings, and with non-farm payrolls due on Friday, markets will be very sensitive to anything related to jobs. We also have the beige book from the Fed. That's always worth watching. On Thursday, we have the inflation data from Switzerland, so definitely keep an eye out for that. That's expected to be soft as well. We have jobless claims, ADP, challenger job cuts, ISM services. So Thursday, the dollar is really going to kick into high gear. We're going to should get some pretty good volatility in the dollar. And then on Friday, we have UK retail sales, which are expected to be weaker. We have CAD jobs report, which is expected to be stronger. And then a rebound because the last month was so ugly. And then the US jobs report expected to become in just as weak as the last month. So a lot of data. Now, we're not going to be trading BK members on Friday before the release, but we will be live trading non-farm payrolls on Friday as usual for everyone. So make sure you join us there. Now, let's look at how things are on a technical basis. So Eurodollar, we dropped below on the daily chart. 2050 SMA looks like it wants to move lower to support down at 115.30. So it could potentially move lower to 115.30, but I don't think we're going to see much more in the way of losses. Dollar yen did break out to the upside. We'll have to see if this breakout holds. But I think with non-farm payrolls due for release this week, I expect more of a grind. I expect it to drop, maybe rebound a little bit, drop, and then wait to see what NFPs will be before we break out. Dollar CAD had a lot less resistance, which is why I really like the dollar CAD trade this morning that we took, because dollar CAD likes to gravitate to the round numbers. We're at the 20 SMA, but I think we could see more relative strength in dollar CAD compared to some of the other major currencies. Dollar Swiss, also consolidation, but Swiss data I think is going to be quite weak. So we may go up to this level here, up to 81.50 in dollar Swiss, and have basically grind within this range here, 81 and 80 cents. Pound dollar, huge breakdown today. That looks like it could move down a little bit more. We'll have to see about that. Aussie finding some support at the 100 SMA. But overall, don't fade this dollar strength. The market is clearly bullish dollars. I'm bearish dollars. If I fade the strength, I'm going to be looking for some clear signals to fade the strength. Otherwise, I'm just going to be very, very careful with the trades. And we could get more opportunities in the crosses because the majors are moving to some key support levels like Kiwi dollar. We've got the 200 SMA, 58 cents. That's key support. I think we're just going to grind around these levels here. So there's a lot going on politically on the data calendar that we'll have to keep you all updated on. So I'll try to do my best. Make sure you follow us on our social channels. Boris is going to come in. He's going to live trade. We're going to roll into live trading indices as well as gold with you. But if you have any questions, let me know. Euro yen's moving to the upside because dollar yen's up. Euro has got good fundamentals. I do think euro yen I like the crosses a lot more than the majors at the front of the week, but I think euro yen could move to upwards to test these levels here around 173.90. Any other questions or charts you want to look at? All right, Boris, do you want to join us? Say hello, and we talk about live trading today.
Hey, good morning, guys. Good morning. Good morning. Good morning. Great week for us to trade this week. We got so much event risk in front of us. We have ISM services manufacturing. We have NFPs. We're going to marathon prop trade on Thursday to really give you guys a good flavor and feel for what's going on. But most important, before I look, Kay, do you want to join us for just a sec, or is she going to go? I was going to ask you. The only question I have on FX that I think is sort of interesting is the strength of the dollar against all the turmoil that's going on the U.S. side. Seems to me like it's more of a case of the fact that Europe is really suffering more than the dollar today. The gilts are at not record highs, but near-term highs. Pound is crashing. European inflation was hotter than expected. Do you think it's just a case of the fact that the dollar is kind of like the cleanest shirt in a dirty laundry basket in the sense that there's a lot of relative strength going on there?
No, I mean, data from Eurozone hasn't been bad. I mean, the inflation data was hotter, but that is actually pro euro, not negative euro, because it basically
Well,
said
I guess my thought is inflation data is hotter. That hampers ECB's ability to lower rates, which
is positive for the euro. If it hampers the ECB's ability to lower rates, is positive for euro. We also have really good. The comment about Eurozone being weak is not supported by data yet because we had really good PMIs. They were revised upwards to the manufacturing basis. Germany is very close to the 50. French was revised up. Italian was revised up. And so until we see the data soften, I don't think that statement can be made because the data from the Eurozone, even last week, was relatively good. The IFO jumped to 89. So I'm not sure where that comment about weekday Eurozone weakness comes from.
Okay, fair enough. Just wanted to know. All right, guys, I'm going to grab the screen from Kay. Say thank you to her. She had a great August. Anybody who is interested, I'm just actually going to put in the link here to join our room for free. Feel free to join our room for free. And then if you're interested, you can always join us as a member inside the room. This is a great way for those of you who are new, who are here, to just get an exposure of the kind of stuff that we do and understand. Kathy focuses all her attention on trading your personal account in the Forex market. And I focus all my attention on trading your futures account in the prop account to help you pass the props. So you kind of get two of the best ways of going about trading in very, very unique fashion, all for the price of one. So go out there, have a great time joining us, and we'd love to see you become a member. Okay, so let me change the screen a little bit here. Bear with me a sec here. I need to do this. Hold on. Oops, sorry. All right, screen this, share. Okay, and then we're going to change my layout. Okay, I'm going to change my layout. I think I'm not sure what I think it's the 50% discount on Apex Trader. So if it's at very worst 50%, but it could be better right now. I'm not sure what
The 90% ends today.
Oh, it ends today, not tomorrow. Oh, great. Okay, so
I'll confirm, but just give me 1 second. The
right.
90% offer ends today at midnight.
Oh, that's even better. Oh, that's even better.
You want to roll a little longer with your trading.
Oh, yeah. No, absolutely. Oh, shoot. Then absolutely. Like, look at the QR code. I thought it ended last night, but I guess they give me 1 extra day, which is really, really great, guys. I bought a few over the weekend. Let me give you the link so you can also get the direct link from us. Make sure before you do anything else, get 4 or 5 of these Apex accounts. They're literally $18 for $50,000. Get $250,000 of possible funding for less than $100. You'll thank me later because they're going to go up and become a lot more expensive after tomorrow. So it's really, really worthwhile. I collected a couple of eval accounts today. I'm actually going to trade a little bit of my own personal live accounts with you guys, the funded accounts, so you can see what we're doing. But generally, this is like the most important thing. I didn't realize. I thought they'd ended last night, but it's really good news. You guys have an extra 12 hours. Go out there, go get some more Apex accounts. That's job number 1 right now. Job number 2 is how do we trade these things profitably? Let me show you. So we had so much fun last week, especially on Friday. We did a little bit of degenerate trading where we just did endless scalping on trend.
Hey, Boris, can you hear me?
Yeah.
If you don't mind, can you show them how to apply the code later and how it shows the discount?
You mean on the screen?
Yeah.
Yeah, sure.
Okay.
Yeah, no problem. Anyways, yes, guys, if you're on Twitter, QR this code. If you are on YouTube, the link is in chat. Actually, I think I'm going to pin this link. Let me pin this. I pinned the link on chat. Okay. Also, by the way, interesting. So we had the poll here. This is really interesting. So what are we trading? Here's the results. 54% of you trade Forex, 16% of you trade gold, and 30% of you trade indices. So if we were sort of divide that, I mean, if you're trading Forex by its implication, it means half the room is trading Forex, half the room is trading futures, which is kind of interesting. So I'm going to end the poll right now, and we'll get that done. All right, the link is used. Yes, so that's a mistake, BLK. I'm sorry, there was a mistake. You can't get the 250 for 16. You get it for 49, which is still ridiculously cheap. There was a typo in the old collateral that Kathy sent out. My apologies. But my point is, I'm going to give you my own personal view on what you should be buying. You can certainly ignore it to your heart's content, but in my opinion, it is much, much easier to pass 5 $50,000 accounts than it is to pass 1 $250,000 account because of the risk-reward ratios on the accounts. In 50, you need to make only 3,000 against 2,500 loss out, and I guess in a 250, I think it's a 3-to-1 ratio. I forget, you have to make like 15,000. You only have $5,000 drawdown, whatever it is. It's much, much worse ratio against you. It's a huge bet skew against you, so much harder to do. So you're welcome to go for the 250 if you want to go for the large account. That's fine. If you do, what I would suggest is get 1 or 2 250s and get the majority of them at 50s. This is what everybody who is a professional trader, everybody who does really, really well in prop trading, all of my friends and in other YouTube channels always fund at 50. That's the sweet spot. In fact, when I speak to executives at Apex, they tell me that's what almost everybody who does well at Apex funds at. So there is, I think, a lot of truth to that. It's very, very cheap. As I said, I think it's like $18. Go out there, go get them. Nico just bought some 3 accounts. Very nice. Thank you, Nico. Really appreciate it. All really good. Can we trade Forex? You cannot trade Forex with Apex. You have to trade futures. You could trade euro dollar on futures, but nobody really does. The bottom line is you don't trade Apex for Forex. You trade it for indices, and we're going to be talking about indices and gold. That's the 2 things we're going to be trading today, really, really well. So that's the business. Let's do a little business to make sure that everybody is set up properly. Because if you've got the accounts today, you're going to be really set up properly for the whole week of trading with me. Now, before we get into trading, we actually got about 10 minutes before the market opens, so this is a good time for us not to do anything except talk trading. So let's talk trading, and I want to share with you 3 things that really, really hit my mind over the weekend that I think are going to make trading a lot more understandable to you. These I would call are the 3 principles of proper day trading. And principle number 1 is size is greater than strategy. That simply means that it doesn't matter how good your strategy is. If you're trading too large, you will fail. And the inverse is also really true. It almost doesn't matter how bad your strategy is. If you're trading small enough, you will stay alive long enough to succeed. It's a really, 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 really important inverse relationship. And everybody does it the wrong way. Everybody tries to trade large size, looking for the perfect strategy, and that's how they blow it up. That's the reason, for example, why so many people in my room pass, is because we actually practice this other idea that size is bigger than strategy. And in practical terms, I use a very simple shortcut. If it's a 25,000, like right now I'm trading 25,000 funded account, this account over here. If it's a $25,000 account, my size is going to be 2 micros. If it's a $50,000 account, it'll be 5 micros. That's it, or maybe 4. Let's just be conservative. We'll make it even numbered, because I'll tell you why we're going to make it even numbered for a really important reason as we go forward in my strategy. So that's it. You can do larger, you can do smaller. I don't give a shit. It's up to you. I'm just giving you ratios that are reasonable. That's all. But do not ever forget that the reason you're losing is because you don't appreciate this first dictum, which is size is larger than strategy, right? Okay. So hopefully you understand that. Second thing is process. Is greater than product, right? That is kind of intuitive or sort of understandable, but let me explain to you what I mean. Everybody focuses on the product, which is the result of the trade. Is a trade winning or losing? That's actually the worst thing you can do, because every time there will be a false product. There is no way you can trade without creating bad product, right? But you can trade well if you stay true to a good process. And what that simply means, in just plain non-jargon, non-bullshit trading English, is if you stick to your rules, whether you win or lose, you will win. If you don't stick to your rules, even if you win, you will lose. Those are just absolute truths of trading world that all of us discover every single day. Prove me wrong. Anybody want to prove me wrong? The product is better than process? I don't think anybody can, because we all know that's true, right? Guys, agree with me on that? Give me a yes if you think that's true. And then the third thing, and this is where Apex really comes in and really comes in to shine, because this is such an important last point. Quit and retreat. Most of you guys who are listening to me are either European or in North America, and you're all basically brought up, doesn't matter what background you are, whether you come from Africa, India, Asia. If you are in the Anglo-Saxon, if you're Jewish, Hindu, Protestant, Muslim, doesn't matter. Doesn't matter what background you are. If you live in North America, you live under Anglo-Saxon values. And Anglo-Saxon values is the Protestant work ethic. And the Protestant work ethic basically says you never, ever quit. You never, ever, you always try harder. You always go one extra mile, which is absolutely worthy. And when it comes to the greater idea of trading, it's absolutely applicable. But it is pure poison when it comes to trading. Trading is one of those really interesting disciplines where all of the basic fundamental values of life that all of us taught in the West fail miserably if we apply them, the way we do. Which is that, I lost on this trade, or this trade is not working for me. I've got to make it work. I'm not going to quit until this trade becomes profitable. I'm not going to quit until this trade becomes profitable are the famous tombstone words on every blown account, right? Claudio, we will. I will. It takes about 24 to 48 hours to do wealth charts. Okay, and I will enable you on wealth charts. I have to. I just have to email them your name and I'll set that up. But thanks for reminding me. I'll make sure that it's done. So everybody understand that it is imperative that you quit when you're losing and retreat. Now, the great methodology that we have in our trading room is that because we have multiple accounts, right? There's one thing I'm going to do. If hopefully I won't have to do this today, but if I have to, I'm going to show you. I have multiple accounts, right? If I lose a trade, let's say I lose a NASDAQ trade in this account, I'm instantaneously going to go to a different account, and the next setup is going to be in that other account. Okay? That's it. We're going to quit and retreat to a new account, right? Is that clear? That's how we're going to preserve all of our accounts, by never, never, never fighting to preserve that account. We're not looking to resuscitate a patient. We're looking to go on to the next one, and we'll come back to this one when we feel better. Is that clear? Does everybody understand what I mean about quit and retreat? Sort of the three principles of really, really good day trading behaviors. Anybody have any questions on any of this before I show you the way I want to trade today in terms of really, really solid, clean structures? Are repairs allowed in my principle? Not on. No, let's just say no for right now. Santiago, we're gonna go walk away from repairs. We'll talk about that. I think that repairs is really a question for coaching. Which, by the way, if you guys are interested in coaching, we will be doing coaching as always on Thursday. Here's the link to coaching. If you want any of the indicators and anything else that you see here, you can't have them unless you're a coaching member. So your only chance of trading as well as we do is to become a member of coaching. So that's why I put the coaching link over there. Please go ahead and join us. And then you get all the indicators, including the wealth charts, including TradingView and everything else. And you'll be able to do that. So we're going to leave the question of repair to the coaching, Santiago, and we'll talk about that more in detail. But right now, we're going to just switch, quit and retreat, and stay true. What we're really going to do, is trade the absolute best possible setup. And right now, we have a best possible setup showing up in gold. Gold is positive slope, white dot, green dot. That's the setup we're going to trade to the long side. And actually, NASDAQ is negative slope to the red side, although it's 9:30. I'm really, really loath to trade this in NASDAQ. But you know what? No, I'm not going to do this. I'm actually not going to do this. I'm not going to trade. I always do this with you guys. I always fall for the, it's setting up. But we always know that the 9:30 to 9:35 is a really, really miserable volatility time. So I'm actually going to be good today and not take the setup. But to show you how I would trade the setup, this is the setup that I would trade. Right now, as you can see, we're going to go to full screen. The gold setup is not even valid anymore. But the NASDAQ setup is totally valued. I'll tell you why. Let me show you why. Where's my thing? Where's What are these shapes? Oh, shapes, maybe shapes. Here we go. Rectangle. Okay, you guys see this rectangle? This rectangle starts with a purple dot, and I'm looking for a red dot against the first red dot in the beginning of the red slope. That is my money trade. The first truly strong signal at the beginning of the sell segment, and I'm short here. So let's say I'm short here at 45. What's my target here? Yeah, no, I'm short here at 40, I guess 41, right? Close 41, and target would be 45. Now I'm gonna make one interesting other observation in this case. This is a massive candle. So instead of doing a 5-15 structure where I'm 5 target, 15 stop, we're going to do half size. This is why I want to trade in evens. We're going to do one tiny little micro with a 30 stop and a 15 target. Even that probably is not going to work because it's 45 against. Yeah, it doesn't matter. It would have stopped me out anyways. Because why? Because it's market open, and that's why I didn't trade it. Because market open is just a very, very volatile structure. And actually, I want to take it back. Not only would this been a bad trade if I took it, but it would have been a bad trade for one other reason. This particular candle, 102 to 24, is literally 80 points long. And my rule of thumb is if the trigger candle is bigger than my stop, I shouldn't be taking it anymore. That's another really, really interesting concept that helps trade you from high volatility. It basically avoids unnecessary high volatility stop outs. So it would have been stopped out on this trade precisely because it would have been just too much volatility on this particular candle. So one of the things that I want to just kind of implement here is when we're trading regularly and the trigger candle is 15 or less, we're going to do 5-15. If the trigger candle is 20 or more, we're going to do half size at 10:30 because we're going to adjust fixed volatility structures, but against a dynamic candle. It's going to make it a lot easier for us to trade these things. Right now, there's no setup over here at all because we don't have any, we don't have any true good setup. I did have a good setup earlier, right over here. Let me show you. Actually, let me show you on the charts. You can see me. I bought this green dot, sold it for 5. This was a 5-15 structure. And why did this work? It worked because I'm doing the exact same thing the other way around. I have a white dot that's followed by a green dot, and the green dot has to occur on a green slope, just like I have a purple dot followed by a red dot, and a red dot has to occur on a red slope. If I have that structure, that is what I'm trading. That's the best, single, strongest, highest probability structure. A couple of reasons why. Number one, we're trading the absolute first move in the short-term trend, in the earliest trend. This is the long-term trend 200. This is the short-term trend 8. So this is the first earliest impulse in the direction of the market. Secondly, we're trading a very clear lower higher high breakout, or higher low lower low breakdown. We're trading the first true momentum connection across these dots. We're connecting the two most important dots on the trade and sticking to just that very, very simple entry exit structure. We are going to be very, very accurate in our structure. So like right now, we have a white dot, and if we have a green dot against a green slope, that's going to be a positive move. Same thing in gold. We have a slice of a green slope. We have a white dot. If we have a green dot, we're going to go to our wealth charts account and trade that. Now on the wealth chart side, I already traded the short side over here where we had red slope, purple dot, red dot over here, that was an easy, clean trade over here. So we'll alternate if we get the signals. If we don't get the signals, we don't trade. That's it. Yeah, so thank you, Santiago. See, I held myself back from market open because I'm really trying to be very disciplined. So minute 7 seconds on the clock, buck 7 seconds on the clock. This is a classic trade. Now, if you really, really want to be super, super, super selective, you can say I'm only going to trade in a direction of the big trend, which means you're only going to take short signals. But I'm going to trade in both directions because first I want to show you the mechanics. And secondly, because as long as I'm selective like this, I have a really high confidence that this trade is going to work. Obviously, it's got to set up before it works. Right now, it's not setting up. If we're somewhere around here, this possibly could be a setup for me. 27 seconds left. The green dot has got to hold in order for me to take this setup. Give me a yes if you guys understand what I just said. Give me a no if you need explanation. There's double signal entry here. I can only take one, so we're going to go with Nasdaq, and then maybe we'll go with gold over here. We'll see if I am okay with gold. So with gold, I am at 49, targeting 49.8 on a breakout move. And with Nasdaq, I already got done. Nasdaq, the trade got done. Now, when I get double signals on both instruments, it's hard for me to. I mean, I executed both trades, but I probably should just only take one or the other trade. But with those of you guys, what happened here? Wait, hold on a second. What happened here? Did I just get clipped? Oh, I got clipped. I'm sorry. I think I got stuffed out. Oh, I got clipped. No. I got filled on gold. I got it filled on gold, and I made a mistake on Nasdaq. I just realized I made a mistake on Nasdaq. It was a 52. Shit, this was a much bigger trade. See, I made a mistake on Nasdaq, and this cost me. On Nasdaq, I should have gone one with a 30-10 target, and I would have been in at 52. The high would have been 62. I would have made my target, and I would have survived my stop. My apologies. This was just a badly executed trade because I was trying to do two. I can't do two at once. So the gold trade worked. The Nasdaq did not work, not because I was wrong on the trade, but because I executed it poorly. It was a really, really large candle. I didn't realize this was a more than 20 point candle because I'm just talking. I'm talking too fast and I'm not paying attention to the market. All right, that's fine. We'll wait for the next structured setup, which may be 5-10 minutes from now. We'll see. The gold trade worked, which was good. Nasdaq trade should have just simply just for shits and giggles, I'm going to go. Oh, you know what? I need to make it. I need to do one other thing on Nasdaq. I need to create the right structure, which is take profit 40. Oops, sorry. 40. Stop loss 120. And we're going to save this as a, this is a 10 by 30. So if I wanted to just simply I took the wrong, I took the wrong trade. Sorry. All right, let's just do this like this. We're just going to do it like this. We're going to manage it manually. I did the wrong preset of this. I was just trying to show you, like, if I was long this, the target should actually be 62. All right, we'll put this over here. I'm kind of managing it crazy. Okay, you know what? 22 there. 10 point. I did make the 10 points over here. I came in 53 against 164. And it's just a good example. What I just sort of wanted to show you that if you have the right volatility stop, the trade works. If you have a wrong volatility stop, the trade doesn't. And the critical thing is to understand how much volatility there is in the triggered candle. I made the mistake before, but I wanted to show you correctly. If I had applied the right volatility stop, that means the right target and stop width, I would have been able to succeed. No, I went long NASDAQ essentially at 53 and get out at 64. But here's the really, really important point. Let's go back to my number one point. Size trumps strategy, right? First of all, I fucked up the first execution. So it's not even execution was bad, right? But because I had small size, really didn't hurt me that badly on the trade. But notice what I did on the second trade. This is why it's really, really important to trade in multiples of 2. Because if you're going to do double the stop and target, you have to do half the size. So I went to 1 size instead of 2 size on double stop and target to give myself the proper structure for what I want to do. Now I'm going to go back to my normal 2 size, my normal 510 stop target. We'll see what it wants to do here. Right now, we're pretty much. I'm going to get rid of all of my executions so it doesn't pollute the chart. You guys can see the chart cleanly. Right now, we don't have any trades because this already succeeded. We're trading only the first break of the segment. That's where the really easy money is. Now, what that does is it kind of like sometimes keeps you out of the market for half an hour, sometimes as long as an hour if the segment is really, really long. And we have strategies where we can take we can just scalp continuously the long-term trend all the time, which we did on Friday, which was a lot of fun. But right now, a lot of people have come back to me and said, "Listen, I really, really love the DOT strategy, but I want to trade it not just for prop. I want to trade it for my own accounts, and I can't trade the way you do for prop because obviously you're taking, if you blow it up, you don't care because it's only like an $18-20 loss. But I can't take multiple trades like you're doing, and with very, very little forethought and lots and lots of scalping. And I realized that I think it's legitimate because when I trade my own account, I certainly don't trade like a crazy man like I did on Friday. So there's a fun way of trading, which is what prop trading allows us to do, and then there's the good way of trading. And the good way of trading is the way of trading where we distill our setups to their highest possible structure. Now, what that means is you don't get to do as many trades, but you get to do quality trades. So was this a quality trade? Yes. Did it work? Yes. Was this a quality trade? Did it work? Yes. Was this a quality trade the other way? Yes. Did it work? Yes. Did we stay out of the market open? Yes, we did. Now we just sit here and chill for the next 10-15 minutes. We need a change of trend. We need this to go red. We need this to go red, or better yet, if this goes green, what we're going to do is we're going to wait for a white-green combination above trend as our structure. The key thing that we're looking for always is a white-green combination to the upside, purple-red combination to the downside, because that's what creates momentum, right? News now and 15 minutes. Ben says, we have ISM is going to be at 10, but what do we have on the news right now? Final manufacturing in line. So it's actually good because that's above 50 boom bust. We have ISM coming up at 10. That should be interesting because we really want to see the two things I want to see is obviously prices and whether manufacturing popped to 50. That'll be interesting to see. There's this huge discussion going on now as to whether we are on the brink of a recession or we're slowing down, so on and so forth. So this data now becomes a lot more important as we watch it all the time. So gold breaks above the 3,500. Gold has been super, super bullish, by the way. Really, really good. And I'll tell you one other thing. So let's talk about equities, right? Stock market indices. I say I trade both sides of the market, right? I trade the long side and the short side. Doesn't matter what the big trend is. I think I want to amend that a little bit. I think what I want to say to you guys is that it's much, much better to trade both sides of the market if the eight period SMA is below the 200 SMA. Same with gold if the 8 is below. In other words, I'm perfectly willing to buy signals when the trend is below the big trend, buy signals when the trend is below the big trend in both indices and gold. And you know why? Because the big trend is up, right? And generally, we all know that stocks have a 75 to sometimes 80% upward drift. It means like 80% of all days are to the upside. That means buy the freaking dip is the single best strategy there is. And there is no cleaner expression of buy the freaking dip than us buying the white dot, green dot in a downtrend, white dot, green dot in downtrend. Gold is very much the same thing. Gold is in a secular uptrend. So when you're saying, oh, I want to trade both trend and counter trend, again, you want to be as refined as possible. I want to trade trend, counter trend on a downside, but not necessarily. I don't want to be selling the shorts. In indices, I certainly don't want to be selling the shorts in gold. I want to be selling the shorts in gold when I'm negative trend. Yeah, this is where context comes in, and it's kind of like a sort of our own fundamental analysis of the situation. The markets fundamentally are bullish. Gold is bullish. Equities are bullish. So yeah, you want to buy the dips in a downtrend. You want to, buy the breakouts in an uptrend, but you don't necessarily want to fade the highs in an uptrend because those are going to be weaker trades. And we've seen that last week where we try to sell an uptrend. Those turn out to be all losing trades. So for now, we're chilling. Market is, just trading back up, waiting for the ism. Trying to sell, yes, written on some gravestones. How's your trading been like last week? What are you guys doing? What's working? What's not working? Did you have a fun time? Degenerate scalping, where the whole idea of what we did on Friday, which was a lot of fun and definitely can be very productive if you get like an hour-long trend. All we were doing was literally buying every single green, as long as the trend was green or the trend was red, one way or the other, we were just literally buying every single breakout trade and waiting for it to hit our short-term target. And the way I think I would probably structure it now. Oh, and we would not take a stop until the slope, until the slope of the SMA turned red. So if we were here and we still didn't get, we're not in profit, we wouldn't move until the slope became red. Then we came out of the trade on a red slope, which is kind of an interesting way of trading. There probably is a better way for us to create a degenerate scalping structure, which I want to think about more. For example, one of the things I think it's very, very clear, I noticed this, that in a good, clean upward trend like we have right now, what you will notice is that the candle will not break the low of the prior dot, right? So if you're here at 75 and your stop is at 14, that's a big stop. I mean, it's not a small stop, but it's a big stop. But it's a reason. Like, in other words, that's the reasonable stop. So like, if you're, just for argument's sake, let's say you were trading, you're trading one entry for long, just for you trying to see how far this trade can go. You bought here, right? 54. And you wanted to manage your trade. What I would do in terms of properly managing the trade is I would just simply position my trade underneath the last dot there is. So if I'm over here, the dot is going to be over here. Then I go over here, that my stop will be over here. Then I go over here, then my stop is over here. It's 35. And now that it's at 236, my stop is at 150. And I came into this trade, well, same 150, right? So you really need to kind of have a very, very big breakout, but at least that's a reasonable place to put the stop where you have no moves. Here's a good example of what I don't necessarily want to do, even though it's a possible setup. If you look at gold, the slope turned red. I have a purple dot, red dot, right? But the bigger trend is up. So if this trade works, great. But if this trade doesn't work, it's not nowhere near as high probability trade as if it was over here, where I have an upward bias. Trade is slope is green, and I have a white dot, green dot. It's a super easy trade. White dot, green dot. This is actually not a trade because this is a green dot against a red slope, so not a trade here. White dot, green dot over here, which we just did. That worked out very, very well. So this may work, but I much rather wait for the market to show me that there is a downtrend in gold instead of trying to anticipate it. Also, we have news coming up in 5 minutes, so no reason to hang. Let's see what the news says. If the news is positive, Nasdaq breaks out to an uptrend. Gold breaks down to a downtrend. We'll adjust accordingly. But doing this, sort of give you an idea, in Asia or in Europe, in European trade this morning, how often do I trade? Because many of you may be asking, you're only trading this first move on the thing, and the switch was actually happening every 20 minutes. It's a very, very, very manageable timeline, especially if you're doing other things, right? If you're watching the chart all the time, then yeah, maybe you just want to super scalp the trend and just make an assumption the trend is going to be half an hour to 45 minutes. If you do that and you basically buy every single red candle, regardless of buy every single green candle regardless of where it is, and just simply take profits, you're going to be very profitable. But remember, this strategy only works if you have lots of confidence that this is going to be a long duration trend. And I told you that those long duration trends, meaning 45 minutes to an hour of pure green price action or red price action, can only really be handicapped, in my opinion, with any degree of confidence after a news event. Like we had, what was the news event that we had on, what the hell was it that we were trading Friday? There was some news. I forgot already what news came out. But whatever news there was, what was it, GDP? I forget what it was. I think it was GDP. It was clearly, it was a clean, clear, positive news. And then we could have traded that, that whole trade, or maybe it was negative news. What the fuck it was? I forgot it was. They gave us a clean, clear trend direction, and that gave us the chance to do this. But today, we have to kind of wait for the news. Like after non-farm payrolls, that could be a really interesting strategy for us to do. And we can do those. We can do that on Friday. But on a day-to-day basis, it's much more palatable, much easier, both on the brain and on the wallet, if you just pace yourself for the fresh trade on the slice, the fresh trade on every new slice. Gold, by the way, look at what just happened to gold. Look how my supposition was correct, in the sense that if I sold this, right, I would have been stopped out. I think, yeah, I had a $3 stop on this, 51, almost. I would, maybe I would have survived it by a tick, but I would, generally would have been stopped out because this was a down signal in an upward trend, and there's no reason for me to take it. Gold now is still positive, positive slope right now, so we can look for more, for more trades for it as it comes out. All right. Any questions? I'm going to stop talking because I'm tripping over my own words at this point. You guys get the idea. Any questions on all of this? Does anybody have any questions of what I'm doing? I am simply taking the first clear buy signal or the first clear sell signal at the beginning of the short-term slice. And I am biasing my posture to the upside. That means I'll take buy signals underneath the big trend, but not sell signals above the big trend. That's it. Otherwise, I'm taking everything else. So like right now, you're looking at gold. I have a white dot, like we're looking at, we can go on wealth charts because we're trading gold on wealth charts. Gold is very, very clean, clear, possible setup. White dot, green slope, setting ourselves up. Our only big issue is that if we get a signal right before news, we can't trade it because the impulse, we could get just ruined on the news flow. So we'll have to stand back. On the other hand, if the news is good, let's say ISM is like above 50, expansionary. Is that good? I mean, if that's good, that should give us a fundamental signal with more duration, and we can try to trade that. So 40 seconds left. How much time do we have left? What is it? What's the timeline here on Forex Factory? We got about 2 minutes, 27 seconds for ISM to go. I'm not going to take any trades until the news passes. Oh, you know what I want to do? So I did make a large volatility stop for NASDAQ. Let's make the cool thing with trading with wealth charts is we can make it like right away. I don't have to do anything. I was going to say if we have big, I can do size 1. So if my regular volatility structure is 8 ticks, 30 ticks, I would do 16 ticks, 60 ticks on a very, very large candle, large volatility candle. This is not a very large one. This is like $4. Just watching what's going on over here. All right, a minute left for the news. Let's see what they want to do. By the way, I need to send you the guys link. If you have not seen this video that I posted about how to create unbelievably beautiful reports, really worth watching. Let me find it. Yeah, here it is. Share, copy link. I'm putting this link in here, guys. Really, really worth watching this video that I created for everybody, because it can transform all of your trading, whether you're trading MetaTrader 4, some crappy ass futures platform like I do with AMP, into incredibly interesting, beautiful reports. And you can see what you're doing right, what you're doing wrong, all of that with the help. Kind of shitty print here, 48.7. So where are the prices? I'm just waiting for prices. Let's see what the market is doing. Market is reacting mildly up because market sees this as a prices are lower. Interesting. So that's positive. So market sees this as a Fed function rate hike, the rate cut, which, by the way, does create a positive gold structure for us over here. Now, the thing with gold, and this is where it gets really, really interesting and tricky. Right now, gold has a white dot, green dot, absolutely giving us a legitimate buy signal with one exception. The slope is kind of red, and I need the slope to start turning. Like, I need the gold to get up to 55 or higher in order to legitimize my trade. However, it's a 50 to 55, 56 trade. So what I need to do, it's a much wider volatility. So we're going to go 16, 60 ticks, and we're going to lower our size to 1, and we're going to go over here. If this holds as a signal, which it looks like it is, we're going to go larger on target and larger on stop to give us the chance to breathe and not get stopped out unnecessarily. So you see, I'm managing both the size and the volatility structure on this signal, and see if the gold is going to work for us. 11, 12 seconds left. 8 seconds left. 7, 5. At 3, 2, 1. Okay, we're in on gold at 56.6, and it pops right against us. And this is why we need a really, really large volatility, volatility envelope, because it's always going to, naturally going to retrace off this big breakout. But the big question is, can it go up to 58 on the assumption that the Fed is, the market is going to judge this as a Fed dovish data point, right? Prices paid are lower. Clearly, we're in contractionary territory. Fed needs to ease to help us. All of this fundamentally should work our way. We'll see if the trade works. So this is us in this particular trade. Let's see what Nasdaq is doing. Nasdaq is nothing. We don't have any signals, so might as well just watch gold here and see how this plays out. No, so my point is about the reports is you can make these reports on any, all you need to do is export data from wealth charts, export data from TradingView, export data from MetaTrader 5, export data from AMP futures. All you need is a CSV file, and ChatGPT will create the most beautiful looking, really gorgeous reports that give you everything you need to kind of understand it. Let me actually see if I can show you an example. While we're hanging in this gold trade, and you guys can watch the gold trade. Let me see if I can actually. I think I may have. I wonder if I bear a second. I may have. I'm just looking to show you where I sorry, let me see if I can find your site. Edit site. No, I don't have the examples with me right now. But tomorrow I'll be sure to bring you the examples, and we'll see. We'll see if you can see, the kind of beautiful trading reports that they did. Now you see how much volatility there is in this gold thing. You see how it's really, really pushing up and down, and why I needed a much bigger, wider stop. It doesn't mean that I'm correct, but at least I'm giving myself a fighting chance here, and that's the whole idea. Is at least you have a fighting chance here on this trade because you've properly configured yourself against a really, really stop. The whole point is, you see my stop is basically underneath this green dot. If it breaks the green dot, it's clearly means that the setup is just not working, and it looks like it's really, really volatile. Gold is having a hard time, I guess, clearing this 55 level. So even though the news is supportive, it may not be enough to push us through. But at least we gave us a fighting chance, and most importantly, the sizing here is small enough that it doesn't impact the account in any material fashion. And we got ticked out on the stop. Okay, so this particular setup just did not work on gold. But on the other hand, here's what's happening on NASDAQ that could potentially give us a setup. We have a purple dot. If this goes a green dot, this is all really good setup. It's a red slope, negative trend. Let's see if NASDAQ gives us a signal. If this, this counter trend rally kind of did it exhaust itself? We'll see. So the whole idea is choose smart, but then also trade smart. Don't oversize yourself, because you always want to give yourself, and let's do one other thing. So we got clipped on this gold trade, right? It didn't work. Let's switch accounts. Let's not, we'll go to a different account. We'll go to the 14 account and we'll trade that account. Again, the idea here is protect your capital, protect your psyche, protect your funded accounts. All of those things totally possible with your gold, with Apex. All right, gold is doing its usual. Let me torture you by stopping you out and then claiming the buy setup. So here, gold, if this becomes a white dot, green dot, it will put us back into another buy setup on gold. NASDAQ so far a little bit quiet, not really generating any sell momentum yet. So we stay patient until it does. See that gold is giving us a white dot, green dot. Also, again, back to very, very large volatility, $56 to $56 volatility. So we're going to have to go again with a single entry trade. If this setup holds, we'll go back in again. Wide stop saved you in MGC. That's good. It did not save me because it clipped me just to the to a few ticks, but maybe I should have had a bigger stop, but what can I do? The stop here was 56 to. How did my stop? I must have gotten badly executed. 56 to. I just must have gotten really. I just got a bad execution on the stop. All right, let's see what goes on here. Gold is 54 seconds away from giving us a second possible signal, while NASDAQ is treading water. But if this goes red, that's going to be a sell signal for us on NASDAQ. All right, let's switch over to gold. 30 seconds left. Again, 1660 wide stop because this is a wide candle. This gold, this green dot has got to hold in order for us to have a legitimate signal. The other great thing about well charts, you can do join bid, join ask. So you can actually get like a pretty decent fill. Here, go join bid, and I'm in the trade. Here's the position on gold. I'm in it 59.3 with a target of 60.9. So did we go through 360? Let's see, 35.60. Let's see if this is gonna rock and roll for us a little bit. We'll see. Maybe not. Gold is notorious for torturing me. Meantime, let's focus to NASDAQ. NASDAQ still not giving me a red dot signal, but looks like it's having that. It's stalled at that above the 200 level. Maybe they're looking to start selling it. So $1.16 on NASDAQ. If this red dot stays, we absolutely have a signal here. It's a 32. It's actually a big trade here, right? 32. What is this? Yeah, it's more than 20. So we have to switch to our 1030 stop at a one size if I can get that. But right now it's not giving me a signal. No signal on NAS. Gold trying to consolidate around this 55, looking to see if it could make the move towards the 60 level again. News is definitely positive gold because it really does put the Fed on a dovish path. It's hard to see how the Fed would not cut given the ISM data. In the meantime, this is now turning back the other way around, which is good because we can now maybe have a buy signal here if the slope turns green. Good job for Dr. D. What'd you do on the funded? Did you go long gold? We can, Santiago. We can definitely do retrace trades. But what I'm trying to do is I want to do just one trade, one setup with everybody in live, so that we don't I don't tax everybody's attention space. We can do a lot of those things in coaching. You went NQ 10 large. That's always a fun trade. Always a fun trade. White dot on NAS. This is obviously just the beginning of a potential. So four contracts at 10 a.m. Nice. Nice job. Nice job. Nice job. With NASDAQ right now, guys, I am watching. So red dot finally showing up on NAS. With gold, we're looking for that 60.9 on gold, if we can get that. With NASDAQ, we're looking for a red dot here to initiate a trade. $160 ticks is, how many points is that? That is it 40 points? Nice. Oh, and we got done on gold. We were very, very patient. You see what, really, really patient. Stayed on that volatility trade, and the gold obviously volatility trade worked. Now we just have to see if we can get a Nasdaq signal. So I'm not doing 1,000 trades with you today, but the trades I'm doing are, I think, a lot more palatable to most people because it's not just insane trading every 5 seconds. And 24 seconds left on this. So this is I'm just looking at this. I said if the trigger candle is more than high is 15, low is 90. So this is definitely a big trigger candle. So I got to go 1030 on this trigger candle at one size. So I'm going to sell this. All right, I'm short this, looking for a 10 target, 30 stop on NAS, just to give myself again the volatility space I need in order to in order to be able to try to execute this. So if we look over here in the DOM, I'm in at 95, and my target is going to be 85. Okay. Oh no, I'm in at, what's my target? What's my? I'm in at 90, I guess, and my target is 85. So a lot of trade against me, as you can see, a lot of movement against me. And if I was 515, that trade would be long over. It may still be long over. I may still not get this, but at least I have the right volatility structure against this to be able to to hopefully survive it. We'll see. Nope. Okay. So interesting point about all of this is we've had a pretty strong downdraft in NASDAQ, big counter trend trade, and then this true sell signal got stopped out. This tells me that the buy signal, which is going to hopefully appear in the next candle or candle two, should really give me a lot of confidence it's going to work. So I'm going to switch accounts to, we got a clip on this account, so we'll go to 10 account, and let's see if we can make the buy signal work on this one. But I do need, very, very important point is, if I get a green dot, but the slope still stays red, it's not a signal. I'll have to wait for another signal for it to really work. But gold definitely, we're talking about post-news scalping condition. Gold is definitely creating a nice clean duration trade, right? Long duration trade where most of the up candles could have really been scalped out really, really nicely. All right, still watching NASDAQ. NASDAQ is still negative slope, so even if I get a green dot, it's not going to work. I will wait patiently. If NASDAQ is really going to break out, it's going to break out in more than one candle. If it's not, then we wait for the setup. Good morning, guys. Who's new in the room here? Say hi to me. Let me know who you're from. Let me know what you're trading. Half the room, when I polled it earlier today, was trading FX. Half the room was basically trading futures products. Slope finally turns green. Now we just need a green dot. Now we need a green dot. And let's see if I'm correct in a sense that this should be a relatively strong buy signal for us. Am I right that this is a pretty good buy signal? Let's see. These are big volatility candles. I didn't realize these candles are really much bigger than I thought they were. I guess trading North America, these candles are really much wider. They're much like this candle over here. Low is 22, high is 49. It's more than 20 points. I can only trade it at one size. Let's see if it holds. Green dot holding with 20 seconds left. Let's see if we can make this a play. 8, 7, 5, 4, 3, 2, 1, long. All right, we're long here. The target is going to be 55. I guess we're in at 44. Target is 55. Let's see if they can run it. $55.25. And we're done. And again, that was the sort of like my thesis. Now, if I'm trading myself, right? I want a lot of stuff. I mean, I'm showing you mechanics every time I'm trading live, but just to kind of let you know, this is the kind of stuff we discuss in coaching. If I'm trading this myself, and I know, hey, I got stopped out on a legitimate short, I then will go larger. I will have more confidence. Like I would have gone two size at 10 on this contract because I had a lot of confidence that when a legitimate trade gets stopped out, the reversal trade is almost is a much higher confidence trade, meaning that it was pretty clear the market really wants to go higher. So taking this trade would have worked. Would have worked pretty well. So my thesis kind of borne itself out, but it's fine. Now, we're kind of, again, floating, really not having a lot of directionality. Market certainly, NASDAQ, while recovering, hasn't really shown an enormous amount of power right now. Gold is clearly the much strongest buy point here, but we don't have any signals in gold because really the only signal in gold that we could have is if it comes back to like a little bit of a red slope and then it gets a white green structure. Otherwise, all of these are good signals, but they're not the setup that we're trading. We're trading the setup of the first clean move in the slice. That's it, just to give ourselves pacing and structure. So today I wanted to just really focus on that, start the week in a very Zen Buddhist mode of like, let's just do one clean setup. And for the most part, that really worked. Only one really, this is the only setup that genuinely failed was this one, this to the sell side, right? The first setup, I just simply actually worked. I just simply didn't have the right volatility pace on it. The gold stuff worked. No, I take it back. I'm sorry. The other setup that failed, that was a legitimate setup, was this white dot, green dot that some of you guys survived, but I guess my execution was poor because I just got clipped right at the bottom. And of course, the second version of that worked really, really well. So, it happens. That's why you trade small size. How do you get in shape after a big fun vacation? How do you get better confidence and stability? This is the way, like to trade less rather than more. I think that's the key thing. Like trading you notice I'm trading calmly today. I'm not, you haven't heard me drop one F-bomb today, right? Like, I don't know what happened to me. Where did the old Boris go? I think that's the key. You really, really focus on one thing. You try to practice all those three things that I said, and it absolutely helps you, right? So here we go back to a legitimate sell signal in NAS, right? If this gives me a red dot, it's a legitimate sell signal, right? See, yes, size does matter, and like everything else about trading, it's always the opposite of what you think, right? Just like I said, quit and retreat, and smaller is better. Although from what I hear, that's a myth. Most women really kind of agree with that, with the second statement, not the first one. No red dot. We're kind of just holding bid here. Really, really, the markets are just very. I think they're waiting for Trump. I mean, I don't know. Have you guys gone down the rabbit hole of like, Trump is dead, Trump is in a hospital, Trump is at Walter Reed? Jesus Christ, that was a couple of hours of my life wasted over this weekend on X. But yeah, there are just all these incredible conspiracy theories floating around. Maybe they're right. Who the hell knows? I mean, crazier things have happened, but we'll know at 2:00 what the hell they're doing, because he has been out of public view for the last 3 or 4 days. Oh, apparently the Trump news is the announcement of Space Command headquarters. Okay, that's cool. Well, is he going to be there? The most important question is, is he going to announce it? How is he going to look? That's what everybody's going to be focusing on the health of the commander-in-chief right now. Look at gold, by the way. Look how nicely, cleanly it went to 65. One of the cool things you can, I don't do this with you guys because obviously we're scalping, but you could really, really use the dots. And it's Gloria. Gloria, are you in the room today? Gloria trades the dots really well for gold. I wonder if she's using them for, like, you can really get some very clean, clear directional clues just by following the dots on a continuous basis. 3-4 consecutive buy signals here, really. Yeah, I know, Ben. I think that's probably much cool. Ben is saying he was playing golf, but you have no idea at the insanity. Really, people have like nothing to do with their life. Like they were saying, oh, those pictures are from 2024. He's wearing the same outfit, but you can tell clearly that this was a 24 picture they released, not a 25. He doesn't really look good. It was like the Apollo moon landing was faked type of obsession. But yeah, it was crazy. All right, look at this. White dot, green dot. Are we going to try to break the 250 higher? Let's see. We definitely have possible setup here. And the cool thing is, the other thing I was going to say to you is, the cool thing about this particular setup that I showed you, right, is it, for the most part, really gives you very few false notes. Certainly, if I was looking at this from 4:00 in the morning when I started trading, this really the most of the false notes have been now in North America. I did not have a single false note when I was trading then. So this the other thing is, you kind of need to add this within a construct of maybe 10 or 12 trades in a day, and just see how many false notes there were. And looking at it this way, I really like the idea. I mean, you never get it consistently, but if we can be like an 8 out of 9 in terms of only one false note out of 9 trades, it's an amazingly effective setup, especially if you can control your size, control your process, switch accounts, do all that stuff. No, I have not done that yet, Jay. That's going to be a while to do the buy sell boxes, just because it's not that difficult, but it's just a matter of timing and resources. They were very very busy on wealth charts with that stuff, but you don't need them. This is the reason why I showed you the white green setup and the purple red setup. That's all you really need. You just need the dots to really trade this very, very well. Gold is coming down a little bit. NAS is not giving me a signal yet. The very cool thing about this particular variation of the setup is it's very patient. Like, it doesn't require this incredibly, if I don't get a green dot on the next candle, I can't take a trade. No, if it shows up 2 or 3 candles forward, it's still a really good setup. You just simply wait for that breakout signal, and when that happens, you have a lot of confidence that it's going to be continuity. right? Remember, what are we trading? We're always trading continuity, right? So we just have to be patient sometimes for the continuity to appear. Right now, so look, notice how many times I would have been, stopped out on chop if I was trading kind of without this setup. But this setup really only one fake stop out. That's it. I didn't get stopped out once here. Just once on over a period of like an hour and a half in a very, very ugly price action for what we do. Like we hate this price action. We want this price action, right? We want this price action like that. So when you have this kind of price action and you're able to avoid most of its negativity, you're in really good shape. Have you guys ever heard of Darvas boxes? Nicholas Darvas, great, really, really fun book from 1960s. Let me pull it up for you. Truly like one of the most it's such a crazy trading book. Really worth reading just for fun. Nicholas Darvas. I just realized, by the way, it's Darvas instead of Davos. Yeah. How I made $2 million in the stock market. This was like done in the 90s. Look at how cheap it is. It's $5. They also have it in an audiobook. Oh, it's an audiobook too. Really, really fun. Really worth watching. Let me give you the link. Where's the link? Here it is. I'll put it over here. All right, so I'm just being very patient. Slope is green, dot is white. Now I'm just looking for a green dot to give me a breakout move. Yeah, he was a dancer. He was a dancer. I mean, like it's like the perfect everyman story. And the reason why I bring that up is because it's still the classic book in momentum trading. If you sort of look at what he did and what we're doing, we're not doing things very differently from what he did. We just have better tools, and we're doing it on a much shorter time frame. But as I was just looking at the box, I realized I just created a Darvas box, and I thought it was kind of interesting. Yeah, and his stuff works to this day if you do it in equities. It really does. Okay, green dot in a very, very tiny little fashion here. So we're going to go to the 2060, see if this is going to give us a shot. Minute 12, minute 10 on the clock. I have a very, very mixed opinion on turtles because I've actually worked with one of them in my older days, and let's watch this trade, and I'll tell you a little bit about it. Another possible buy signal in gold here with a white dot, green dot. But right now, 36 seconds left. If this green dot holds, we're going to have a tiny putrid little trade here in NASDAQ if it works. Let's see. This is one of those kind of trades where I'm not going to pull the trigger until the candle closes because I really need to have a definitive idea that this thing is so tight that the green dot can go away, which it is kind of now. So we're going to wait till the candle closes and make sure that it paints a green dot. Otherwise, it's really not a breakout candle and it's not worth the signal. No signal, so we stay flat. In the meantime, gold does look like a potential trade now if it gives us a green dot in here. So we'll see. You see how doing this forces you to be patient, but in a good way. You're not really, it's the setup naturally makes you patient instead of you having to be patient. If you don't have a signal, there's nothing to do, so you just chill out. So I'm watching this. I'm watching the gold here, $1.09. We're gonna focus on gold here. So what is gold here? It's a 65.60. Yeah, I think we're gonna have to go with still a small size strategy on gold. Okay, 54 seconds left. Let's see if gold holds a green dot, we're gonna go long again on gold here. And then I'll tell you my famous Richard Dennis story. "29 seconds. How's that? Just looking at NAS? No, NAS got nothing. So we're really focusing on gold here. I'm going to try and see if I can join bid. And I'm in gold. My position is 67.3 against 68.9 on my target. Let's see if this works. All right, so we're in gold. Close. A little 67. I actually came in a little too high, but it's fine. All right. Where should I be? I should be probably over here. So let me see if I can put my stop over here. What's the low over here? 59.9. Stop should be 59.7. Okay. All right. Let's see if this holds. Hopefully gold gives us a runner. Meantime, NAS is giving us a sell signal. Purple dot, red dot, starting to turn down. 48 seconds left. Let me move this over. And this is can't really this is a very, very tough trade, guys, because if you look at this, you see the slope is actually not giving us a red signal. So unless it drops to like 26, 25 on the close, where it's finally a red signal, we really can't take this. So we're going to wait till the close here. All right, it does look like it's a good trade. So we short here, and the target is going to be 1375. Here's the ladder. So we'll see what it wants to do. Oh, it looks like we got done. So we got done. So that was a nice clean trade on NASDAQ to the short side. Let's see in the meantime with gold. Gold is just hovering, just holding bid here. But legitimately long. So you got you got a very good idea. So this was obviously not a tough trade, but just trade that went down to the last second. But the slope stayed red. We got short. We had the right volatility stop on it, so it gave us plenty of room, and we took the short. So anybody take that trade with me? All right, you guys want to hear my Richard Dennis story before we got to go? So when I was young and working at Drexel Burnham Lambert, Richard Dennis was, of course, like the god at that time. The book had come out. He had already made millions of dollars, the turtle trader, and we raised $100 million for him to trade stock index options, which were very, very popular at the time. Look at Nasdaq finally giving up the move here, right? And I'm not kidding you when I tell you this, that he lost everything in like. Oh, we're done on gold, guys. Good job. So both trades work. The gold trade worked. The Nasdaq trade worked. Very, very patient. Look at this. This is the keep the Boris from dropping the F-bomb strategy, right? Look how chill I am. I'm serious. Do you not recognize me? I'm practically a fucking Zen Buddhist monk at this point. You take that trade, Miguel. Good job. Jim took that trade. Very nice. Good for you guys. So, anyways, Dennis managed to lose the $100 million they raised for him in 50 fucking days by doing the craziest, stupidest shit, like the most like retail tilt stuff. He sold like, I remember he sold like $25 million of puts at expiration, naked puts that then got stuffed because the market reversed and closed down on, the day of expiration. They just like crazy, crazy stuff. And after that, I kind of realized, you know what? A lot of these guys are just lucky; they're not that good. So, it was kind of interesting. So that's my story with turtle traders. You can look it up. It was, you can read about it because there's a big news story about how he burnt that whole fund really, really fast. But the point wasn't that he burnt the fund. I knew exactly, like I saw the trades were just ridiculous, and that's kind of made me realize that a person can be saying one thing but doing completely different things. I'm trying to say one thing and do the same thing today. So that's our final mantra for the day today, right? Say it and do it. So I hope you guys had fun today, right? Today was a good day. We pretty much killed everything. We even the couple of trades that didn't work were all legitimate trades. About it's a news story. It wasn't a book, Evgeny. You just got to Google, Richard Dennis big loss, and it'll come up the news stories. But yeah, I hope everybody had a good time. Now, everybody, by the way, whoever is new, two things you need to do if you're sitting in the room with me right now. Number one, do not fucking move unless you buy the Apex accounts. Trust me, you're going to be, even if you don't even know what the hell prop trading is, just buy the accounts because they're dirt cheap, and I will show you how to work them over the next 2 or 3 weeks that you guys get to keep them. I mean, $18 for $50,000 account is literally the most ridiculous price ever. Get a few of them, enjoy them. Today we traded all of my funded accounts. Tomorrow we'll trade the eval accounts. You get we'll trade these accounts. Oops, where am I? Shit. We'll trade these two accounts, these two 50,000s that I got, and we'll trade those, and we'll have fun with those. We'll trade larger size on those, obviously, just for more fun. But we're not going to do much difference. We're just simply going to trade more aggressively because these are eval accounts, just to give us a good idea of how we can run the evals to target just as well. So that's number one. And number two, if you want to join BK, here's the link. Absolutely free to come join our community. And then obviously, if you want my coaching and Kathy's coaching, here's the link. Links are all over there. Okay. Otherwise, I think the purple dot, red dot, white dot, green dot, great strategies. Just great fucking strategies. They're great in Asia. They're great in Europe, and they're really, really good in North America. So have fun. You take the gold with me, Alan? Good job. Have fun. Enjoy it. William has a question. Okay, so William has a question. I have a question for ADSMA line. How do you turn line from blue to green and red? Because my line in the background is only blue. I can't see. That's probably, William, you probably are. First of all, are you using wealth charts or TradingView? If you're using trading, the most important question is, are you a member of coaching? If you're a member of coaching, then you have access to this indicator. If you don't have it, you don't have that special change of things. And number two, if you're a member of coaching, but you're on wealth charts, you need to make sure that you're using the BFF dots only indicator. Okay. Thank you. Thanks, Mr. Rockies. Have a good one. So email me. We'll try to figure out what's wrong. But generally, if you're a member of coaching, you should have access to both the Trading View and the wealth charts, and both of those have the proper configurations to set it up. You're in Trading View, and are you in coaching, William? If you're in coaching, you want to have the BFF dots only indicator, not the BFF scalper, just to make sure that you're using the right one. Sorry, Jay. 8 a.m. for what? Tomorrow trading, live trading? No, we're gonna do like 9. Tomorrow's gonna be like 9 to 10:30, as always. All right, email me, William, and we'll square it away. We'll make sure that you're configured on the right one. Now, what I was going to say to you guys, for those of you guys who are a little bit more degenerate, or maybe even more serious about trading trend, this particular function, blue, purple dot, red dot, white dot, green dot, not always by any means, but often enough that it can be really, really lucrative, is the trigger point to the bigger trend, right? So if you're like the person like, Boris, I love your scalping, but this is bullshit. I really want to go for big points. This is your gateway. This is your stepping stone to bigger points. This is where being here with a stop above the purple gives you 26 to like literally 80 points worth of price action. Being here with a stop below the white, which you barely would have survived. You came in at 54. You're at 74. You're a 20-point gold move, a $2,000 gold move if you were trading long term. Now, again, it's not in any way, shape, or form guarantee of the stuff, but it is a stepping stone to that big trend move. That's why it's so good to learn that sequence, because that sequence is the beginning of some very, very positive things if you get the trend right. So I'm going to leave you with that, and have you guys look at it if you want to trade more longer term trades. But from our degenerate scalping worldview, a very, very good day. I really, really enjoyed it, and more importantly, we kept it all calm, which is nice. We're starting winter in a much more calmer fashion. I see everybody tomorrow. Be sure you get the apexes, because I didn't realize they extended it to today, which is awesome. And come to my coaching if you want. Here's the link. You get Kathy for the price of my coaching too, because she does coaching before I go live, and that's going to be really, really cool too. If you want to trade Forex, right? So you can trade Forex, you can trade futures, you can trade both. You get both of them for the same price. All right, guys. Hasta la vista. I will see everybody tomorrow. I got to run. Bye-bye.